Well, good afternoon or good morning, everyone, and I am thrilled to be here live with Sherwood, aka Woody Neiss, co-founder and principal of GUARDD, a company doing some really exciting and innovative things in the alternative trading system space. We'll get that into that in just a moment, but GUARDD is really making security trading easier and more exciting. Woody, welcome. Can you tell us a little bit about GUARDD and what exactly it is and why you created it?
So GUARDD is an online compliance tool for companies that wish to allow investors in their pre-IPO companies to trade those securities on what's known as alternative trading systems. So we're a technology solution that allows issuers to come in and disclose information about the company, their financials. Much of that information comes from audit reports. We pull that information into a standardized report. We run it through what's known as our Blue Sky compliance. We then publish that in what's known as a national securities manual so that issuers are in compliance with state securities laws, otherwise known as blue sky laws, when it comes to secondary trading.
Well, Woody, that sounds extremely impactful to where the direction of the private securities market is headed. So what are some of the pain points that typically private security issuers have been dealing with that you're starting to help address through GUARDD?
Well, I think the biggest pain point is most people don't know that when it comes to trading securities, particularly a secondary transfer of securities, that it's regulated at the state level. Many people do these offerings and these primary offerings, and they raise capital from investors. Most companies, private companies, do it if they're not raising money, going to the bank and getting the funding. And they do it under these exemptions that are federally regulated. And so by doing it at a federal level, they preempt state registration, which is great because it removes the cost and compliance and bureaucracy that comes with trying to follow 50 state securities laws. And so that's great at the primary offering, but everyone's confused at the secondary level. And actually, nobody really even knows that when it comes to the secondary trading of securities, states have jurisdiction. And because they have jurisdiction over the transfer of these securities, you as an issuer need to comply with 50 different state securities laws when it comes to, do I want to allow my investors to trade these securities that I have? So we actually are helping with the education in the marketplace so that issuers understand, hey, you know what, if you want to allow liquidity for your investors, which we think is a great thing because investors are pouring billions of dollars into private companies and they need liquidity at some point, you need to be compliant with these laws that exist, and they're called blue sky laws. So we're doing that. The other hurdle that we've tackled for these companies is, if you want to follow 50 different securities laws, you can imagine you've got lawyers that have to be involved. You've got 50 different states that have 50 different laws. Uniformity among states has always been a challenge. And so to comply with that is just going to be a bureaucratic nightmare and a costly one at that. So we solve for that problem as well by helping issuers actually qualify for what's known as a manual exemption. And a manual exemption is recognized in 43 states across the nation. We help companies qualify for the manual exemption. And what the manual exemption states is if a company wants to allow for secondary transfer of their securities, issuers need to provide ongoing disclosures so that investors can make an informed decision about whether they want to buy those securities. And so we pull in this information, like I was saying, in a very standardized format, and we help publish it so that you don't have to go through that process of calling each state, finding out what the registration requirements are, and then paying the registration fee for that. And so we tackle, the compliance side, we tackle the disclosure side so that issuers really have an insurance policy related to, I don't want to mess up with these state securities laws, and investors have access to all this information.
Yeah, there's a lot going on. I mean, broader awareness for consumer investors, if you will, the non-accredited investors, digital transformation happening in the financial sector in many ways, and then of course the education, like you mentioned, to these private security issuers. I know that regulation crowdfunding was a big catalyst for a lot of this activity now starting. Can you just share a little bit about some of the activity you've seen in the evolution of the way investing in these private securities is happening, and then what's on the horizon as well that GUARDD's really got an eye on to help continue to address for the ecosystem as a whole?
Sure. So the private capital markets continue to grow, and they've been growing, for decades now. With the Jobs Act in 2012 that was signed into law, there were three parts of it that allowed for online solicitation of investors. That online solicitation did not exist before. And so the three changes were what's known as 506C, that allows accredited investors to invest in offerings, and you can do it online now. You can do general solicitation of accredited investors. Before, that was prohibited. Regulation crowdfunding allows issuers to raise up to $5 million online from both retail and accredited investors, provided that you provide a bunch of disclosures. Those securities have to be held for 12 months. After that, they can be freely transferable. Regulation A+ is the third transformative change. It was a change to what was known as Reg A before, but it made changes that really allow retail and accredited investors to raise, to get into these investments, and these issuers to raise up to $75 million. Now, in a Reg A offering, it has to be qualified by the SEC. In a Reg A offering, those securities can be freely transferable literally the next day. Now, all of these changes came into place. And so we saw this happening. We wrote the law for regulation crowdfunding, so we knew what was happening there. But we also knew the bottleneck. Like, we're allowing investors to pour capital into these private companies. All this money's coming in, all it's coming in. Yes, some companies might go public. Many will choose not to go public. Investors do need to exit these businesses at some point. And so we realized that we needed to come up with a solution that would allow these investors to exit. So rather than trying to create a whole new law, which was, insurmountable to begin with, and I'm amazed that we were actually able to pull it off, we were like, what are the ways in which the current securities laws allow for investors to exit investments? And so we looked at what existed in the marketplace, and we created a private company solution. Now, there's public company solutions known as merchant and OTC markets, but they focus on very specific type of companies, aka public companies or companies that want to list on OTC markets. There was no one out there that built a solution for private companies. So we looked at what they did. We looked at the regulations as they existed, and we built this online tool that essentially does what I said. It allows companies to complete information about their business, who's running the business, where they're located, information about their operations, all that financial information, beneficial owners, the last 2 rounds of financing, all of this amazing information that you'd want. And we built it into this technology. Now, that accomplished one thing. It accomplishes the ability for these companies to actually do these disclosures. But there's an evolution that's taking place in the marketplace that we're actually seeing in front of our eyes as well. The digital assets, the tokenization of what's happening, fractionalization of securities. I mean, it's amazing what you can do today. You can go on these websites and you can buy a share in Babe Ruth's, bet. You can buy, a share of a car that you can't actually own, but you can benefit from the appreciation of that car over time. So what we're seeing is more companies are using blockchain, they're using digital assets to issue securities because there's benefits in terms of tracking who owns these shares through the blockchain. But you can do all of this with technology, but what you can't do is comply with the regulations. Regulations haven't changed. So despite the advances that we're seeing in technology, despite the new ways that investors are investing in companies or companies are raising capital, you still have to follow the rules. And so, GUARDD will always play an important role in this, because until those laws change, you have to follow those laws. And we're here to help them, be compliant with these state securities laws.
Yeah, you said it very well. I think the ecosystem that's surrounding the private securities and investing as a whole is changing so rapidly with digital transformation. You talked about the issuers themselves, of course, the investors, the regulators as part of that ecosystem. Let's talk a little about the CPAs and the role that they play in the information that supports confidence in reviewing these securities, both from an investor perspective, regulator, and the like. So, why is it important for CPAs to be aware of new technologies like GUARDD and what's happening in the financial markets that you're supporting?
I mean, the capital markets, like I said, they're changing. So by default, the role of the accountant in this process is changing and evolving as well. It used to be that accountants just looked at the books and made sure that they could check to verify that everything was there. But now they actually need to help these issuers or these companies that are raising capital understand the impact that the different types of financing will have on their financials. So the role for the accounting firm is completely evolving into capital formation, I think. You've got tax, you've got accounting, but you really have capital formation as another pillar. I think that is an increasingly important role for these accountants. Now, I think the benefit of technology when it comes to this is it helps them streamline the tracking of what's going on with these securities that are issued or whatever type of funding they go through, so that they can do their diligence on those securities itself. But it's important that these accountants play with these technologies that are out there. I think there might be confusion as to technology. Whoa, I don't want to do this. But the beauty about these technologies today is you can literally go online, you can see what the technology is, you can play with it. And then they've got these sales teams that are doing demos. And I did this the other day with a database company where I was just like, I love your technology. I think I might want to use it. I'm a little confused. And their sales team walked me through the entire thing that I wanted to do. We've done that with GUARDD. I think accountants can benefit by using this technology. And it doesn't take that long to play around with it. And I think what they will see is all this technology does is it takes a lot of the processes that we're all used to doing in a very old-fashioned, old-school way, which is mainly offline, but it just brings it online. And it digitizes the way in which we're doing it. So by bringing it online, it's streamlining it and making it more efficient for accountants and CPAs and lawyers or anyone else that's playing in the industry.
Yeah, absolutely. I think the modernization of processes through technology is obviously a key way that the digital transformation is occurring. And like you said, most new cloud-based systems such as GUARDD are intuitive to use. They're easy to go directly out to the website and quickly create an account. I know I've gone out to GUARDD and have logged in and been able to navigate seamlessly. And of course, like you said, companies have great resources in place to help, whether it's CPAs or other users of these technologies be successful with them. So Woody, as we mentioned at the top of this conversation, you are part of the AICPA CPA.com Startup Accelerator program that's helping entrepreneurs introduce their technologies to the financial ecosystem. And so tell us a little bit about your experience working in the Startup Accelerator program and what other entrepreneurs should know as well.
It has, in short, it's been great. It's been great to work with the other cohort members. It's amazing to see all the technologies that they're bringing to the industry. But from a personal perspective, it's been great in two ways. One, it taught me how I need to focus my attention. And two, it created a blueprint. And so the first, in terms of focusing, as an entrepreneur, we're working on a billion things at once. This really allowed me to set goals and then every day look at those goals and see if I'm actually working towards the end of those goals. And in a way, it introduced me to individuals through the accelerator that are helping me turn my marketing message, which used to be education, into marketing. So they're helping me figure out how to take what I've learned and what I'm trying to get across and fine tune that into a message to get into the marketplace. In doing that, I realized that this has created a blueprint for me. And that blueprint really comes down to the fact that I've worked with the AICPA Accelerator. Okay, the focus of that is how can we help accountants and CPAs understand the role that they play, particularly what I'm doing in pre-IPO trading of securities. But at the end of the day, there are issuers, there's lawyers that are doing this as well and play an important role in this process as well. And so what it's done is I figured out what I need to do to communicate to accountants so that they understand what I'm trying to do. Now, if I just replace the word accountant with lawyer, I have an entire blueprint of an entire other industry that I now should be reaching out to with the same type of message and education and marketing so that they understand what I'm going to do. And so the accelerator has just been this great incubator for helping me focus, helping me come up with this blueprint, and helping me, get to the next level. So I'm excited about where I am at, and I'm excited about where we're going.
Well, Woody, it's been great having the opportunity to chat with you today. I think your leadership and forward-thinking approach with GUARDD and what you're doing to help move the capital markets forward in this age of digital transformation, continue to drive connectivity with the ecosystem from accountants, business owners, investors is extremely impressive. I know I've learned a lot today. I think those tuning in probably have as well. So thank you so much for your time. And for those of you watching, appreciate you taking a few minutes out of your day to learn a little bit more about GUARDD and what we're doing here with the Startup Accelerator program. Thank you.
Thank you.